To help answer the question why I'm going to be doing a fundamental analysis on renewable energy stocks, specifically solar, I recently looked at the EIA's U.S. Energy Information Administration website, and I looked at their 30-year forecast. So if we look at their 30-year forecast, currently renewable energy accounts for 19% of electricity generated, and it's forecasted to grow to 38%. That 38% breaks down currently, solar being 15%, with growth up to 46%. It's the largest growth category of the available renewable energies. And for that reason, I want to find stocks now that are well positioned to acquire that growth where I could put my money in now and potentially grow with them.
All right, now that we've shown you why we're choosing renewable energy stocks based off of the information from the EIA, we want to jump in really quick to show you what's going to come up in this video. Normally, we like to show our faces on our channel. So if you're new to our channel, go ahead and subscribe for future content. In this video, Derek's going to choose some of the renewable energy stocks. He's going to compare 6 of them, and we're going to see which one is going to, quote unquote, win. And I'm going to walk you through an example of a ticker on Yahoo Finance so that you know exactly where to find the same information that Derek's about to analyze. And he's going to explain some ratios that you should know about. Also, if you're new to the channel, Derek has a master's degree in analytics and is a former stockbroker.
The way I found the stocks that I'm going to be analyzing is pretty simple. I just went to Google and typed in list of solar energy stocks. Now, one disclaimer. These stocks I just randomly chose. I didn't read their description, so there is a chance that they aren't the stocks that I would put my money into. Over here in Excel, this is going to be a little bit easier for me to compare the different stocks. So to help orient you, at the top I have the ticker JKS, and across we'll have the other tickers that we'll be comparing. On the left side we have the metrics that we looked at in Yahoo Finance. You'll notice that some of the ones I had mentioned are management effectiveness, the income statement, balance sheet, cash flow, and as I mentioned, I'm just interested in looking at the short percent of shares outstanding. I've also highlighted in green the ones that I put a little bit more emphasis on, and for the ones that stand out even more, I've put a yellow marker. You'll notice there's only one with those, and that's the ROE, return on equity. The numbers here are what we were just looking at in Yahoo Finance as of November 6th. So let's compare JKS to another solar company. So if we compare it to CSIQ, we can see how they do across. So one thing that immediately stands out to me is their capitalization is about the same. However, their PE ratios are dramatically different. For me, I personally like to look for lower PE ratios with other strong financial indicators to suggest that the stock may be undervalued. The earnings per share are also interesting to me looking at CSIQ. I want a high earnings per share. Looking at profitability, we can see that it is more profitable. We can see that the operating margin is higher. We can also see that the return on equity is substantially higher. These are all really good indicators that if I were to compare these two side by side, so far I'm leaning more on CSIQ. As I mentioned earlier, further analysis is needed to determine if I'm going to put my money in on this company for the long term. Other things I want to look at are the EBITDA, and this is in millions. We can see that their earnings are high. This is very attractive for me as an investor. One thing that does cause pause is the quarterly earnings growth year over year is down 67%. Now with our current environment in 2020, this may or may not be expected, but compared to their competitor who is up 153%, this would cause pause for me to do further research. How did the other quarters compare? Is this a one-off? Why was it down? Other thing I like to compare is cash, except I don't have that comparison over here, but I do see that they are positive in cash. Their total debt to equity ratio is low. I prefer it to be a little bit lower so that they're not over leveraged, although as I've mentioned, growing companies do take on more debt, and that shouldn't scare you away. Book value per share is slightly lower than the JKS, however, they are comparable. Interestingly, this company has less short shares outstanding. In my mind, it may cause another question to be researched. Is this a company that people see that has potential growth? So at least in this comparison, I'm looking at CSIQ over JKS and am concerned here at why we had a negative growth when JKS did not. So let's add in another stock, and we'll go a little bit quicker through this one, just looking at the highlights this time. So in this one, we can see that SPWR are is much closer to JKS. We can also see that the earnings per share are lower than all of them. This is a little bit concerning for me. I want a company that can earn me money. Another thing that is concerning is we don't have the ROE on this, but we do have the return on asset, and it is negative. This gives me a little bit of pause to wonder if management is in need of improvement that could improve the effectiveness of the company. Another red flag that I'm seeing here is they have a negative earnings. This is something that, as an investor, I don't particularly want to see. However, the income statement is of this period, so it would be interesting to look at more income statements to see if this is a less of a loss than the prior years. And just as the other one, I wanted to see how many shares or percentage of shares outstanding are shorted. Let's go ahead and compare another one. So this one is Run. So Run has an extremely high PE ratio. For me, I'm trying to get a value where I can get in and allow it to grow and get larger for me. A PE ratio of 824 gives me significant pause, especially when the earnings per share is so much lower than its competition. Looking at its return on assets, we see a negative 2% and a negative 23.73% in their trailing 12 months. This gives me significant pause, and at least out of the 4 options, me personally, this would be a deal breaker. Others that are assuming more risk may look further into this, but to save myself some time, I would just cross this one off at this point. So let's go ahead and add our 5th competitor, ENPH. One thing I did not point out, but I'd like to highlight now, I have this in gray. If you're the investor that says, well, which one is cheapest? This is not the way to invest. If you are comparing based off their current share price, I would highly discourage you making your investment decisions based on that. So I've graded out to let you know this is not what we focus on when choosing a stock. Now, moving on to ENPH, their PE ratio is second highest, not astronomical like RUN. Remember, in our ratios that we talked about, speculative stocks will have high extremes, and this one, I believe, would be a speculative stock. The next one to look at is earnings per share. They do have earnings per share. This is attractive to me. Still not as high as CSIQ. Looking at return on equity, ROE, we see that it has a 62.51%. This is enormous. This is something that really is attractive to me, which would allow me to put it on a list to look further into. So if you're keeping up with me, the 2 that I would put on my list to look into are CSIQ, and I would also look at ENPH. ENPH specifically because this is so high. This is high. CSIQ has great earnings per share, and their PE is low, which allows me to think, hey, in the next 30 years, if they retain a strong financial position, could be a great long-term company. They also have positive earnings, which is a good sign for me on both of these companies, although the earnings are lower compared to CSIQ. And at cash, they have a very strong cash position. And their company is shorted the least, which in my mind is a positive sign. So let's add the last competitor, and let's look at SEDG. So SEDG has the highest share price, but as mentioned, this is not what I'm going to make my long-term investments on. So their PE ratio is high, 3rd highest out of the lot. Their EPS is the 2nd highest out of the lot. Their return on equity is high, 2nd highest. Their earnings are the highest. Their earnings are the 2nd highest. And their total cash by far is the largest. Just so that you know, that's $1.18 billion in cash. Their company is also the least shorted. Now, with SEDG added, this is where my current mindset is. If I wanted a company to get into to potentially grow, I would start here. If I wanted to investigate one that would potentially give me another return, I would start here. I put it in yellow because what gives me pause is I don't have this other data to compare against, which in my mind is fairly substantial. So I need further investigation. The reason I even highlight it is this value. I highlight it because their quarterly earning growth year over year was substantial, and I would like to see what else they can do. They also have a positive earnings, although it's small. It would be good to compare this against historical statements to see where it was and where it is now. The other company that grabs my interest is this one, SDG. So the reason this captures my interest is, as I mentioned, cash is king. They have a substantial amount of cash. What gives me a little bit of pause is they have a high PE ratio, so may be valued above what they are worth. The last one that I would hold on to in this run for further analysis is ENPH. The reason for this is their ROE is substantial, 62.51%, although what gives me slight pause is they may have already been overvalued, meaning I may be late to the game on this one. Alright guys, if you stuck with me this far, I've got two more views that I want to show to you, just another way to be able to analyze this with colors. So the first view that I'm going to hop over to is just simply looking at the high and low per row. So for example, CSIQ, it has the lowest market cap out of the competitors here. So it is orange and bold. ENPH has the largest market cap here, so it's green and bold. And that is done across the board. So what I'm going to do is just scan a little bit so that if you'd like to, what you can do is pause your screen and look at the different comparisons. Again, it's across the row, just to look at, of the six, which one's the highest. All right, and the last one that I'm going to look at is this other coloring. Again, it's by row. It's looking at highest to lowest in the ones that matter. If a low one matters, then it's green. For example, in the short down here, we can see if it's the lowest, it's green. In my opinion, I don't want a company that is highly shorted. Of these ones that have a high market cap, they're green. I want to look at the largest in these ones. So this is another view you can do. I'd recommend you pause, look at it. I'm not going to go through all of this like the other one, but hopefully you find this helpful. Now, at this point, it concludes the analysis that I've gone through. Again, I would recommend a deeper dive into the ones that I've highlighted to further that down. I wouldn't want to put into every single one of these. I ideally would just choose one. With that said, if you liked what you saw, please smash that like button, subscribe for future content, and leave a comment down below if I've missed something or something didn't make sense. I do read all of those. If you'd like to see a future video dig into one area specifically, let me know. If you'd like to see me analyze another industry, feel free to send that my way. I would love to go through this again.
All right, guys, it was easier to show you the side-by-side comparison in Excel, but we really wanted to show you what it looks like when you look up a ticker, which we looked up CSIQ, which was one of the ones that Derek had indicated he was really interested in. So we're looking at this original ticker on Yahoo Finance so that you are able to look for the information that we provided on the Excel spreadsheet. Here's the price that we had shown that it has listed, and some of the other things that we talked about. The PE ratio is right here, the EPS is here, and these are some of the things that we had talked about when we showed you in our Excel spreadsheet. Now we're going to click over to the statistics because this is where you're going to get a lot of the information that Derek had previously shown you in the Excel spreadsheet. So these are all those here, but if you scroll down, you're going to get a lot more. So this is the return on equity that we had mentioned that gave us the warm fuzzies. We like that number. The quarterly earnings, the number that gave us pause that we were not so sure about, but they do have a lot of cash. Another thing that we had mentioned when we went over this in the Excel spreadsheet. So this is where you're going to get a lot of those numbers when you go to the actual ticker on the Yahoo Finance page, and this is where you can look at it with any other ticker. If you haven't already, go ahead and like and subscribe, and we look forward to seeing you on our next YouTube channel video. Thanks, guys.
Okay, guys, so this next section is going to be optional. So to save you some time, what I've done is added timestamps into the description. So feel free to turn your phone sideways. Go ahead and click on those. As you're doing that, make sure to smash that like button and subscribe for future content. Just to be able to help you guys out with a fundamental analysis, there's a lot of ratios that you should be aware of. So I've compiled this from a lot of the things that I've personally done from being a stockbroker, from my master's in analytics, and even my undergrad in business. So types of financial ratios can be boiled down to three core categories: capitalization, liquidity, valuation. In capitalization, analysts can assess the risk of a company going bankrupt by studying the amount of leverage, the proportionate amount of long-term debt. In its overall capitalization, long-term debt plus equity. This one's good to be aware of to see the financial stability of a company, make sure they're not on track to bankruptcy. You want to make sure a company is strong with their debt to equity ratio. So leverage is the use of long-term debt financing to increase earnings. In here, you'll see the debt to equity ratio. It provides a common measure of leverage. Liquidity ratios measure a firm's ability to meet its current financial obligations. Working capital, although it's not a ratio, is the amount of liquid assets available to pay for short-term obligations. Go ahead, pause the screen, look at these, write them down, research them if you have questions, if you don't understand them. But these are liquidity ratios that you should be aware of when performing a fundamental analysis. Valuation ratios, these are the ones that you'll hear a lot about. You'll see them on websites, you'll see them in reports, they come up a lot. So the valuation are really important. In fact, if you ever watch Shark Tank, they talk about these ratios frequently. The ones that I'm going to highlight briefly here are earnings per share, EPS, and price to earnings, PE. So one thing to be aware of is growth companies usually have higher PE ratios than cyclical companies. Compare PE ratios within similar industries to see how competitors are doing. It's not recommended to be used as the only ratio to determine valuation of a company. Investors should be aware of extremely high or extremely low PEs. Speculative stocks often sell at one extreme or the other. Another ratio to be aware of is inventory. I really like looking at this one if the company sells goods. This one allows you to see how quickly they will turn through those goods. It gives you an indication if they're able to sell or do they hold on. If they're holding on to their inventory, it's not a good sign because inventory is extremely expensive. So this is a good indication comparing them to their competitors, how quickly they can go through their inventory.